Hey everybody, it's Patrick Keller. I hope you're doing well. It is October 21st, and I realize it's been kind of a while since I've done a market update for y'all. And so I want to get you some really good data and show you some graphs today on what's going on in our real estate market. I will tell you just kind of in summary that the market is still performing very well. Interest rates are very low still. I mean, 30-year rates, I've seen people getting in below 3%, and 15-year rates, I've seen people in the low 2%. So interest rates are still great. Market is performing well. There are some trends that I do want to show you guys, so please stay tuned for this, because I think that this will be kind of educational, and then maybe even be able to make some small predictions on where things are going in the next couple months. But exciting news that I want to share for y'all, and hopefully this will be helpful. So the first thing that I want to dive into is, and this is always what people want to know, but what the average sales price is for sales in this area. And just so you're aware, I'm looking at Hendricks County data. I mean, that's the majority of where our business is done. So I'm just looking at Hendricks County data right now. The Hendricks County average sales price. What I did is, if you check out this graph, I looked back over the last 2 years because I was just kind of curious of how it's grown and how it's gone up. And you can see that over here in January of 2018 on the left, the average sales price then in January was probably around 220 in Hendricks County, and you can see over the course of 2 years that it's slowly increased. Obviously, there are dips from time to time, but the average sales price has now eclipsed 250. It's definitely over 250 and trending towards around $275,000 in the Hendricks County, and that's going up to October 2020 data. So market has steadily appreciated at a pretty good clip over the last 2 years. And then truthfully, I think you'll be able to see here with the data that I'm getting ready to share with you that I don't foresee it like crashing anytime soon or stalling out anytime soon. If anything, it might just level off. But yeah, it's pretty astounding right now. The average sales price, close price, is above $250,000 in Hendricks County. And what's crazy is in April, I remember doing these around like the April timeframe, post the coronavirus lockdown, and it was under 250. So it's climbed, a good 25K or so just in the course of like 6 months. So that's really good. Let's take a look at the next stat. I want to show you guys days on market. So again, this graph is looking back over the last 2 years. Pretty crazy to think this, but in January of 2018, the average consecutive days on market was about 100 days. And then very, very typical in the spring, especially like May and June and the end of April, the days on market always seem to decrease. And so in 2018, the days on market, dropped from in January to about 100 to less than 30. What's really great is, if you fast forward to this year, the cumulative days on market in January, which in January and February and early March, typically months that are a little bit slower in sales, it was lower than 2018, meaning that houses in a traditionally slow period of time in real estate this year sold a lot quicker than the last 2 years, if that makes sense. You will see a little days on market increase blip in that March of 2020 timeframe. Obviously, that was right in the midst of the coronavirus lockdown, where most of the businesses closed and people were told to stay at home. The days on market did increase then quite a bit, just because people couldn't get out and see homes and there was a lot of uncertainty. That's pretty much diminished, and you can see that average days on market in May and June of 2020 were very similar to previous years, 2019, 2018. So again, overall, I would say even right now in October of 2020, the average days on market is hovering around 30 days. That's including all price points. The price points that are lower, so $250,000 or less, are generally selling much quicker than 30 days. So we haven't seen yet a days on market increase due to season. Everything is still selling quickly. Again, I could say this in another way. The days on market in October, September, October, which generally people claim to be slower months, like after school starts in real estate, they are just as low as like May and June of last year and May and June of this year, which were really hot real estate markets. Okay, so basically days on market is staying lower right now in the fall than previous years. Okay. Let's share with you another stat here. Oops. Let's see here. Sorry about this. Okay. Let's take a look at the next one. I want to talk about months worth of inventory. This is pretty cool. This is a pretty cool stat to watch. This is saying that if you look at the grid on the left, that the vertical line is talking about how many months worth of homes were on the market in Hendricks County at a certain period of time based on consumer need. And you can see that in the beginning of January 2018 and the beginning of January of 2019, there was 5 months or more worth of inventory on the market based on buyer demand. Now, what's pretty interesting and telling is that the beginning of 2020, there was just a little bit less than 5 months, so a decrease in inventory. And then overall, you can see that October 19 and October 20 and October 2018, we're obviously sitting in October 2020 right now, there is identical months worth of inventory, so just over 3.5 months worth of inventory on the market each year. So pretty interesting. You know, you hear people say, and you probably hear real estate agents say a lot that, hey, there's so much less inventory than previous years, so you need to slap your home on the market, or you absolutely should sell right now. Technically, there is the same amount of inventory on the market today as there was in October of 19 and October of 18. The only real change that I can see is, truthfully, it looks like there was a lot less inventory on the market in the summer of 2020 than there was the summers the couple years past. So that's why our market really like soared this summer, and that's why prices went really high, and that's why list to sell price ratios, which I'm going to talk about here in a little bit, that's why they went so high this year, is because our inventory this summer was a lot less than the summers of the years behind us. But it seems like we're catching up really quickly because I think a couple reasons. I think inventory is going back to where it always has been for the last 2 years because, one, people heard that the market was so good in the summer because of low inventory that they're jumping on board now. So, I can tell you that from personal experience, we're getting a lot more calls now, people that wanting to list than we're used to this time of year, because they're wanting to take advantage of what happened in the summer. And then the second thing is I think coronavirus put a pause in a lot of people's plans. And so now that coronavirus is obviously not disappeared, but we're getting better at treating it, and the results and the outcomes are getting better. People are feeling more positive putting their house on the market. So there's been a very steep decline in inventory between March and April to now a very rapid incline. So I think we're going to see probably this influx of inventory over the next month or two that's more than what we're used to because of the latent coronavirus sellers, and then also people trying to take advantage of the pricing, that it could increase our days on market, meaning that the houses could last on the market longer. And then that also means that price points could drop a little bit. I don't think they crash. I don't think they drop substantially, but I think that they might level out. as more and more inventory rushes to the market. At least that's what it looks like it's trending to be. Let me show you the next stat here. I want to talk about list to sell price ratios. This is really interesting. So this is pretty neat. If you look at list to sell price ratios, this is just a graph, excuse me, of this year. You see in January of 2020, the list to sell price, meaning what a house was listed for and then ultimately what they closed for. You can see that it was about 97.2%. And it rapidly increased up into the middle of March, beginning of April, which means that those people went under contract in February and even potentially January on those houses, and then probably didn't close for another month or month and a half. And that's normal because generally we see list to sell price ratios increasing heading up into spring. But you'll see this nice big dip in April and early May closings in list to sell price ratios. If you look at it, it's really not that big of a dip. It's like 1%, but that's, you know, $2,500 based on the average sales price. You'll see this dip, and that was most likely due to coronavirus, right? Coronavirus hit, and mid-March we had the lockdown. It affected a lot of people. And those deals that still sold during that time frame were closing in late April or even late May. And so their prices probably dropped down a little bit because sellers were probably a little bit more motivated to negotiate during those time periods, and because they wanted to get it sold in the midst of a lot of uncertainty. Now you can see that we rebounded in May and June and July, and even in June and July, this is pretty crazy, but deals that closed in June and July, meaning they went under contract in May, closed above 100%. So on average, people were getting more than what they were listed for when they listed in May and June. So I hope you find that to be educational for you and like resourceful and valuable, because if you're thinking about moving, maybe like next May is the best time for you to put your house on the market, because historically it looks like in our area that close prices actually go above list price in June and July, meaning that the house was probably listed in May or June. And then you'll see with the rest of this graph here that list to sell price ratios have remained right about 100% all the way into about October, and they're dropping just under 100%, but they're still at 99.5% or above. So basically people are still getting what they're asking for and listing. And I think that this little drop here towards the end of the year comes from several reasons. One, I think that appraisals have been coming in a little bit low. And because people have been pushing the envelope on price, the appraisals come in and say, oh, wait, it's not really worth that much. And then people are settling. I also think that maybe a small surge of inventory has created a little bit, just a tad bit more negotiating power for purchasers here at the end of the year. Not a ton. So basically the other flip side to this is if you're a buyer, you're going to want to expect to probably pay list price even into this fall season, or just a smidge under, like maybe 1% less than the list price. So I hope you find that to be valuable. And the last thing I would show you here is the number of sales over the last 2 years. I just kind of found this interesting. So I think that there's always some doomsdayers out there. I'm going to stop sharing my screen for a second, but there's always these doomsdayers out there that, you know, say that a certain market, stock market, real estate market, the tech market, anything's gonna crash. And then there's always the overall positive people that say, oh, it'll never crash, it's always gonna climb, et cetera, et cetera. I looked at this stat today and I thought that this was pretty interesting. And I want to share it with you. So you might have heard of people saying that, you know, a real estate market crash is impending, it's close, just because, you know, prices, and they also say so much activity is going to cause that. Well, if you look over the last 2 years, this is a graph over the last 2 years, that you can see throughout 2018, there was actually more real estate transactions, real estate sales than there was in 19. And 19 and 20 look to be pretty even overall. So you see that the beginning of 20 and the first quarter and into the, like probably the first half of the second quarter of 2020 performed a lot lower than 19 did. But it looks like 20's ending at a steeper climb than 19 did. So I think that they're going to be overall equal in the amount of sales and transactions as 19 and less transactions than 18. So, like the crash of like 06, 07, 08, it stemmed from a lot of things like predatory lending. That was a big reason. People were buying houses that should not have been. But also there was so much activity. Like there were so many people buying houses and it just kept ramping up. People that were buying houses that shouldn't have. It's pretty interesting when you look at these stats, there's actually been less real estate activity over the last 2 years. Meaning that there's less listings to buy and there might be less buyers in the market over the last 2 years over time. So that kind of is promising to me. It probably means like we're looking towards maybe a stable market. Of course, anything can cause the real estate market to crash. Like, maybe jobs freeze up again, or anything that our government could do, like making a big move. I don't know, with other countries or conflicts or any of those things. Obviously, no one has any clue of what those things will be, but those things obviously motivate the real estate market. But if all things remain equal, if our economy remains similar and the job market remains similar and the interest rates remain similar, I foresee a stable market if all of those things are created equal there. So I hope this was educational. I know it's long, but I do know that some of my followers like this really in-depth data. And so, check out the parts that you want, and I'll type up a little synopsis of what I said too. So, I think if I can make any small prediction, it would be if everything stays similar to it is now in regards to the economy and all of that. I'm not even talking about our election. I'm just talking about our economy. If everything kind of stays similar, then I foresee a stable market ahead of us. So I hope you guys are well. If you ever need anything, please don't hesitate to ask. You can always give me a call or shoot me an email. Hope this was insightful, and y'all take care. See you later. Bye.